Hello, good evening. Hope everyone's okay. Sorry I haven't been around for a week or two. I have, a week. Oops. I really haven't been very, I got the lurgy, but I'm surviving now. And Bitcoin's certainly been having a really good time, hasn't it? So I'm just going to tidy up this chart for a second and we'll talk about what's going on. As you know, corrections are normally three waves. Here's a really good example of it in this wave 2 down here. The key question for me is, I think that we are in a wave 4. So from the lows that we made in December 2018, this was wave 1, 2, 3, and we're in a big wave 4 here. So the key question is, has this wave 4 finished? Or is this just an interim wave within that wave 4? And, to be honest, sometimes it really could be either. Sometimes waves 4 are shorter than wave 2, but quite often if they're not equal in price, they're equal in time. So if we were to measure how long wave 2 took, and in time just loosely projected it from here, as you know, this puts us finishing on the 27th of December, end of the year. And that's very common for a turning point in crypto. It's exactly what happened down here in 2018, 2019. So I wouldn't be surprised at all. And it's, as of course, exactly what happened here in December when we made the big high in 2017. So I wouldn't be surprised at all if we were to make a big low down here and do another leg lower. And that would mean that this is either 1, 2, 3, or if we fit in some fast swings. So this could be, very often a wave 4, you can do a triangle. So we might do something like that. And this finish, obviously it would need to be really tight. So something like that, so that we finished in time. I think that the time this has taken, we're kind of running out for that. So that's the bearish view here. And so the bullish view is that with this 5 ways down, we've finished this wave 4 correction. We're starting a new upswing. We've gone 1, 2, 3, 4, 5. We're in the 5th wave. And, we've got room to go higher before we have that wave 2 pullback of this new upswing. So how are we going to know? Well, to be honest, we just have to keep going level by level and watching for reversals or pullbacks that turn into reversals. At the moment, we're in a really strong uptrend. Each one of these pullbacks has by no means turned into a reversal. So we rally, we go sideways. Since we broke out from this lovely 3-wave correction here, a perfect example of one, we rally, we go sideways, we rally, we go sideways, we rally, we go sideways, and continue. And when you have these big green thrust candles, I know I say this a lot, but the 50% of these halfway back of these candles is very often support and resistance. It's called a Maribosi line. So you can see here a perfect big green thrust candle. We only came 50% back. We went sideways for 5 days and carried on. And so here we're doing the same thing. We had a big green thrust candle on the 15th. Now, so we had a weekend of sideways. Although we had a little shakeout last night, didn't we? But we are really still sideways. We haven't closed below halfway back of this candle. And for me, just in terms of basic daily candlesticks, that keeps us in an uptrend. If this were to turn into a bigger pullback, the definition of an uptrend is higher highs and higher lows. So as long as we keep doing this and we don't take out a previous low, then we're still in an uptrend. As soon as we go below that low, we're neutral. And then if we make a lower high, we've become a downtrend. So for now, we are sort of on the daily time frame at least, pretty happily in an uptrend. And we have room to go a little bit higher. So if this were the bullish view and this was the wave 5, then we could make new highs. If we hold above new highs and this swing low and we keep looking higher from here, then my next upside levels will just keep going slowly. I'm just going to put I'm really slow since I had this cold. I'm just going to put 113, 1272, 1.618. So the first upside target, if we make new highs, would be 69,700, 74,000, and then potentially 87,200 if we keep going. Now, very often, if this is a wave 1 and this is our wave 5, they have a fib relationship. So we can measure wave 1, which wasn't terribly big, and project it from the bottom of wave 4 there. And you can see how this is where, right where we are now, is where this wave 5 is 2.618 of this wave 1. And so possible resistance. They don't line up perfectly in this case though, do they? Now that's the bullish argument. The bearish argument is that actually this is an X wave and this is ABC. And so we have one leg down, one big leg up, another big leg down. We're going to end around the end of December, make an important low there, and then rally. So if that's the case, where would this end? And I think if I measure from this low here to here and project it, you can see that we've got room to go that little bit higher, that we haven't quite reached it. And that has that look of those, oh, if we make a false break higher here, so we trick everyone that we've got this sideways range, and then we make that little false break higher to get everybody jumping on the buying bus and then reverse, you know, that's what that would look like. So that's the next really kind of level that I'm looking at, 63,227. So room for a little squeeze higher, but I think after that, you know, it's probably new highs and we'll see where we go from there. So short term, as long as these lows hold, that's what I'm looking for. And we have room to go a little bit lower here, because if, remember, 3 waves and most common relationship is an equal. So if we do that here and these two swings are equal, then this next pull lower, we come down to these lows here, don't we? And it lines up perfectly at 68,741 on the index price. So if we continue lower for the next couple of days, excuse me, 58,741 is really the ideal buy level for Bitcoin here. So either we hold 60,000 on a retest, and below it a little bit lower, 58, and that keeps us in the bullish uptrend, that keeps us going sideways and in a correction in an uptrend and not a bearish reversal. Underneath 58,000, I think that we have got a bit more of a correction coming, and that for me would signal that we might, you know, I would certainly exit some of my longs and wait and see. Then the next levels that I'll be looking at, I'm just going to tidy up here. If I measure from the lows, or at least this low here, but I think because we've got 5 waves up, I'm going to measure from this low down here at the September. The 236 fib level comes in here at 56,527. So really underneath that, I think that we are going to start that bigger sort of C leg, if you like. So this is A, B, and C leg down. And so if we break under 56,000, I think that we are headed back to these lows here around 42,000. I know that sounds crazy, but 56 or 54,000 more likely. As if we can stay above 53,000, I think it's unlikely. No, I'm just going to leave it at that. I think that we're going to start that bigger. In fact, I'll make it a little bit lower there. It's 54,000 is our key support. We're going to put it from our June lows and say if we go below 54,000, we're going to do that bigger C leg. So you can see we've got quite a lot of room to pull back here without affecting the trend. That's also, you know, back to the daily 20 moving average, isn't it? So still bullish at the moment, room to squeeze a little bit higher, but we are quite overbought. Why do I say overbought? I really do think that the best indicator of overbought is how far you are away from your moving averages. And just from our 20 moving average, we are, quite a long way away. We're more than 10% above our 20 moving average. And for me, that means overbought. And you can see on the way up, each time we got a little bit stretched and quite a long way from this pink 20 moving average, we pulled back to it and pulled back to it. And so again, here, each time we got a little bit too far away, we get pulled back to it like a bit of a rubber band, if you like. You can only stretch it so far. And for me, this is a little bit stretched in Bitcoin. I wouldn't be surprised if we did come back to 54,000, 55,000, and it wouldn't hurt the uptrend. Okay, so one thing I did want to mention at the moment is Bitcoin dominance, because everybody, there really hasn't been any sign that the alts have been joining in. For the last couple of weeks, most alts have had a really bad time. Here it is, Bitcoin dominance chart. Alts have had a really bad time joining in, and this mostly has been, if we look at this weekly chart, because since basically the beginning of September, Bitcoin has been massively outperforming the alts. We've got a double bottom here on the bottom down at 39, and we've got a double top here. So we've got a bit of a sideways range going on. I'm pretty sure we're headed back to the top of this sideways range. A breakout here would mean quite a lot of upside, to be honest. When you have a sideways, when you have a double bottom like this and you break the high in the middle, then you normally go twice the distance in terms of fib retrace levels. That would put us all the way back up here, back to these lows, probably back to 59, and that's going to be quite painful for alts. And there's two ways that can happen. It may just be that Bitcoin's outperforming, so money will come out of altcoins and go back to Bitcoin. It may be a little bit of euphoria about ETFs or whatever. That could happen. It also, I should point out that Bitcoin tends to outperform in a downtrend. So when crypto across the board is selling off, Bitcoin outperforms. It doesn't fall as hard as altcoins do. And so this also could be signaling that we are going to see another leg lower, at least in the short term, for Bitcoin. So that's what I got my eye on just at the moment. We've just moved above the 200-day moving average over the weekend and found support from it. So everything is pointing in Bitcoin dominance to more upside and more problems for alts underperforming. Okay, I always like to look at the big alts to see if they, how Bitcoin trades against Ethereum, for example, is quite a good altcoin indicator for me. If we take a look at that, Bitcoin, you can see that we've been in a pretty nasty down. Here's our weekly chart. So this pretty much mirrors what we've been seeing in that Bitcoin dominance chart. Bitcoin is mirroring that. We're underneath the 20 moving average in this one. If this is just a three-wave correction, a bigger three-wave correction, so we've gone 3 waves down, and here's our B wave up, or our second wave. If this is a third wave, we've just broken that 61.8 level. I think we've got more downside to come in Ethereum against Bitcoin, and we're headed back to 0.0522, which is where we'll say hi to this weekly 50 moving average as well. So this three-wave correction then points to more downside to come for all alts. If we use this as a proxy for them, that would take us also back to sort of 50% of the whole rally. That's what I'm thinking for Bitcoin. So at the moment, I probably wouldn't be overweight Ethereum, certainly against Bitcoin. I think it's set to underperform. Now, if we take a look at the US dollar, let's see where we are with this. Got my daily chart here. We've got this very similar pattern, haven't we, to Bitcoin, as in we've had a big pullback. At the moment, we're just going sideways. Have we closed, more than 50% down on this big thrust candle? No. Have we closed more than 236 fib back from the lows? No, in fact, that's where we found some support. But if we do close under 36.59, this also would say that this is an A and we've got another leg lower to come, and this will likely be at least 61.8 of this first leg. So this would be at least back to 31, back to 3,000, and potentially back to sort of 2,900 by the time we catch up with this daily 200 moving average. So yeah, it's a little bit tricky. Key bull bear line, if you like, then becomes 36.59. If we close underneath that, we have got a bigger leg lower coming for F dollar. At the moment, this is just sideways consolidation, but they're outperforming. And key support, we bounced off it nicely this morning, but here we are back down here at these lows, and everything feels like it's kind of rolling over a bit. So key support for Ethereum there. Some of the charts that I like the look of at the moment. If you like, in fact, this is Doge. Let's put Doge up. So for me, as you know, I like moving averages. These are the daily moving averages for Doge US dollar. And today we have closed above the daily 50 moving average. For me, that's quite a key one. This chart doesn't have a terrible amount of history on the daily, but you can see how this was resistance when we were underneath it and resistance, and now we have closed above it. This points to more upside to me for Doge, and this also looks like one of those continuation head and shoulders bottoms. Now, I haven't closed in above the neckline yet, but this is a bullish pattern if we can close above it. And let's see if it lines up with any fib levels. So it wouldn't be terrible to have a little punt at Doge, I don't think. This 38.2 fib looks like the closing price that we need to close above. And then the 50% today was the high, so that's also going to be a bit of a 50% back, previous high. That's also going to be a little bit tricky. That's at 0.273, but this shape pattern should be bullish for Doge if we can close above them. Now if we do, then let's take the more conservative lower neckline. Then our target should be twice this distance from the head to the neckline, which takes us up to 0.318 for the next target on the upside in Doge. However, if a head and shoulders pattern fail, it's usually because they're a three-wave correction and they then do an equal measured move, and that would mean for Doge, if we were just an equal measured move correction and not a head and shoulders pattern, that we would stop at 0.2917. So either way, we've got some upside. It shouldn't be a losing trade if you buy the break. But those are the two levels on the upside I'll be looking for, 0.291, and then most likely, I think 0.3182. Won't be in a straight line anyway, will it? So Doge for me, I'm watching this one quite carefully. Normally when you cross above a daily 50, how would we know if we're wrong and it's not going to go at all? Back below this daily 50 moving average, which is at 0.241. When you cross above it, it should become support, and that means yesterday's high should become support. So 0.241. We shouldn't go back underneath that if we're going to keep going higher in Doge, and that's why I particularly like this chart. Okay, so let's look at some more. I've been a bit under the weather, so if I'm a bit slow, I apologise. If I don't catch all your comments, I apologise. Hello, Jonathan Coleman. Bullish question. Could this have been a third wave, 40k to current price? Exactly, it could be, John. Yes. Anyway. Okay, let me check everything. Litecoin just has a little pump. See, the Litecoin for me, is the leader. So if Litecoin, Litecoin is usually one to go first. I think it's certainly one that I watch for that reason. So it might. Anyway, for now we're going to take a quick look at MATIC. So if we look at MATIC on the daily, we've been kind of coiling up, haven't we? One of the things for me, if you so from this, if you have three-wave correction like we have here, A, B, C, I put my fibs over both swings, the A to the C. So that's what we've done here. And those are how I lose the fib levels. And here, when we double topped at the 236 fib, for me that validated it. And what we had here was a reversal at 50% level. When you have a 50% reversal, you're usually looking for 50% back. That's what we got if you break the 38.2. So we've gone 50% up, 50% back. Here we went up 50%, back 50%, and you keep doing that in a smaller and smaller range until you break out from it. And so in this case, MATIC has broken it, the pattern to the upside. So I think this swing is over. This correction is over, and hopefully we're in a new upswing. What we don't want this new upswing to be, again, is one of those equal kind of measured moves. I don't think it is, but, you know, in fact, it looks pretty good to me for a wave 3, and I think that we should continue higher to retest this 50% level and then higher. So this is quite bullish. Now, I've got my Heikin-Ashi on because we've been going back and forward. But each one of these fib levels, as you can see, particularly this 38.2, is support and resistance. So we pull back to ideal support today and have held it, bounced off it. I know we've got a little bit of a tail, but for me this looks like a perfect three-wave correction, pull back to support. I think that this looks pretty good to keep going higher, but we've built a bit of a sideways range now, so we need to see a breakout from it. But yeah, I definitely... if I had, I wish I did have a long in MATIC, but I'm going to be watching for this to break to the upside. So 1.72, then 1.98, and so on from here. Now, in terms of targets, let's measure this whole first swing and the correction. And so our first target is 1.74, which is a retest of the highs. And our second target, therefore, is going to be 2.191. So, yeah, MATIC looks pretty good to continue higher. But, you know, always flat moving averages and in the middle, it's a little bit, you know, tricky. But this is exactly, you know, this has got a little bit of a sloping neckline. But this is exactly the kind of continuation head and shoulders pattern that we're hoping will trigger in DOGE and continue higher as well. So work so far in this one. This is a pullback to retest the breakout. I'm looking for it to continue higher. So MATIC looking pretty good. Let's look at Ripple, XLM, NEO. I'm going in order of the list if you look in the text on the title of this video. So Ripple and the endless lawsuit. Now, this morning, I'm looking short term at Ripple. This is a 4-hour chart because we had a pretty nasty sell-off this morning and we came all the way down here. And when we were looking at it, or it was really last night, wasn't it? Sunday night. This was a Sunday night shakeout wobble. This made a textbook to the tick equal measured move correction. And now that we're back above this 38.2 fib level again, this is looking as well. If we could rally from here sharply, maybe a bit of a wonky head and shoulders, but either way, if we look left from here, we can see what important resistance and support this level is at 1.07. So if we break it, we'll likely retest the lows, but I think that this is a really good place to look for a rally from, to be honest. That's what I'm waiting for. I'm waiting for all this from this tight little wedge to see if this can give us a strong move higher. So Ripple holding support. I'm cautiously optimistic with this textbook three-wave correction that we can do another leg higher from here. Now, they say that if this was, let's just say, we're looking for 5 waves and this is 1, 2, 3, 4, well, wave 4 should not trade in wave 1 territory, or at least in the closing territories, and this hasn't. So, you know, this doesn't look terrible, let's put it this way. But if we got back underneath 1.018, it wouldn't be good news. This whole swing would be over and we would likely retest the lows. So, Ripple, just like MATIC, holding pretty good support. Let's see if it can turn it into something. Let's look at XLM. Because I'm afraid this is more in the Bitcoin camp. Lower high, big drop, 3 waves. This second was, and then here we are at the 886. At the moment, we're holding above the 200 moving average. This is just a pullback, not a reversal in XLM. If we can hold this daily 200 moving average, we've got room to go a little bit higher and retest these highs, haven't we? If we measure from this low, so if this is just a correction, if we measure from this low, this 61.8 level where we've stopped at is pretty bad news. This would say this, the whole rally from the June low here was one big correction. If we drop from here, potentially, if we continue above 0.3991, next upside target would be 0.48 and almost at this 50%. So I would say probably that slightly higher 50%, and this would be a kind of a zone, a target zone. So key resistance at 0.3991 and key support here at the 200 moving average. So we've got a very tight range we're looking for a breakout from, aren't we? If we continue above 0.3991, got a nice big upside target at 0.49. If we break down here, then yeah, it makes it more likely that this whole move was corrective. So I wouldn't kick it, you know, I'd never throw in the towel completely when these moving averages are flat, because it's not really a trend. But when you have flat moving averages, what you've got is a sideways range, and we are quite likely then to head back towards the lows of this range, or at least down here towards these previous swing lows. So it wouldn't be quite so compellingly bullish for me in Stellar. That's what I'm looking for. Hello James, I'll try. Yeah, I'll try. Okay, neo.spell. I'll talk for as long as my throat will let me, okay? So let's look at Neo. So normally, if you... There's a couple of ways of looking at this, right? Let's have a chart tidy up. If we put our fibs from this high to low, I would expect this 236 fib to be support. If this was just a pullback, fib levels like a ladder. You know, when you break above one, you expect the one below to at least be support. It was initially. If we break it, I think, you know, we are setting up ourselves for a retest of these lows, unfortunately. If we put the fibs the other way, though, which is what more people may be looking at, let's see how we go this way. Doesn't really line up, so I'm going to leave that. And I'm going to stick with, we are sitting right on pretty key support. And below it, with these moving averages lined up this way, we're lining up a retest of the lows, and if not, another leg lower. So, yeah, let's see how we're doing here then. Put some regular candles on, because we're holding these lows pretty nicely. There's a low, low, low from here. And so I would say, yeah, this one could go either way. It's holding support. Bunched up moving averages. Back to the bounce from here would take us back to the top of the range and probably these highs, somewhere around 45.88. Let's take that away. I'm neutral in Neo. We're holding support. I think I'm going to be a little bit more bullish. If we could get above 43.53, that would send me, for me, back 50% of this drop back to these highs and back to 45.77, this high here. above 45.77. I think we've bottomed, new leg higher, and yeah, this whole correction would be complete. So yeah, that's what we're looking for. 43.53 as key resistance, and then above it we're looking for 45.83 bull bear line, and above that new swing higher. Next one we're going to look at is dot spell layer. So dot spell layer. Okay. Dot. So when we yeah, I don't like this. Let's leave that. So I'm going to zoom out to the weekly. If we measure this first big swing here, first big swing higher in dot, and project it from this low, so we have a big 5-wave rally, 3-wave correction, and we're looking at this to see, you know, where our targets are. Now that we're above 39.90, I'm looking for that to hold as support, and we keep going higher to 58. So that's how these fib levels tend to work. If you go beyond this 61 point level, it should become support. I think I've measured it right. Some exchanges might have it here, in which case we should move our support a little bit lower to this high, 38.89, and we can bring our target down a little bit to 56.50. But either way, as long as we stay above the September highs, I think we're looking good to stay on our uptrend. If we drop below those highs, it doesn't mean that we're not going to keep going to that thing. It just means that we're in a bigger correction and we've stopped trending, and we'll be going sideways in a correction. And as you know, potentially in a correction you could come all the way back to the previous low. That could send us back to 32, which is quite, yeah, that's quite a nasty correction, isn't it? So my favorite view here is that yeah, a 3-wave correction holding above this support, and we keep going higher. I think if this is 1, 2, 3 for our correction, and this was our new upswing 1, 2, 3, 4, 5, we are due a bigger 3-wave correction here, and so I wouldn't be in a rush to buy this. I just want to see if it'll hold these supports or not. So 39.80, 39.90 on the retest is where I'm looking for it to hold if we're going to stay in an uptrend. If we don't, then I would sell if my longs, and I would sit and wait and see where it comes back to bottom. So somebody said Litecoin just had a little pump. Is that a leader? Does that mean that everything else is going to pump from here? For me, Litecoin hasn't broken above resistance, so no, not yet. But yeah, I do watch Litecoin quite closely. Okay, so the next one we're going to look at is Spell, and then Layer. So here's Spell. Now, I've been scribbling on this chart quite a lot, as you can see. So when we looked at this over the weekend in my group, this was our key resistance that we couldn't get above, and this was our key support that we needed to hold, and that's exactly what we've done. Again, very nice 3-wave correction. I'm going to put my regular candles on, and you can see, I know we dipped underneath this level, but on the daily close we didn't close underneath it. And for me, that's what's important. 38.2 fib pullback level. So now we're going to watch and see if we get a bullish reversal here. So far, let's take these fibs away. So far not, and we're underneath these moving averages, which are quite tricky. Sometimes that means a little bit of a double bottom before you get going. For me, if we can close above this 236 fib level, which I'll move to the right so we can read it, we'll be on our way up again. 0.01846. So tough resistance here now if we're going to be going higher. Momentum says that we should turn higher from here. It is a pretty nice three-wave correction, but that would be your sort of timing trigger. Once we can close above 0.01846, then next leg higher for spell token. So looking good, actually. Another one that's holding support. Layer. I think we looked at that today. Let's look at layer. That's my dog. Here we go. We looked at it yesterday. This is very nice, isn't it? So again, 5 waves up, I think, 3 waves back. If we look at where we came back to 61.8 of the rally, 38.2 back to the center line again, and then broke higher. We should see new highs. We've stalled initially at this high, but this should take us to new highs after that pullback. The problem is, when you pull back to the 61.8, that means that if we were to measure from this low to this high and project it from here, that our resistance is that retest. So it's 1.2580 that we need to close above. Because if this just is a correction, and very commonly in corrections, the third leg is 61.8 of the first leg, that's here. So if we can close above 1.258, 1.6915 would be the next upside target, and then maybe 2.39 if we really get a motor on. I haven't got any weekly moving averages. So 1.25, this level that we're at here, 1.258, is pretty important support. And if we do that 236 fib thing going the other way, so we'll put it from this low, we don't really want to close under this 2.36 going down, because that would say bigger move lower, wouldn't it? So 1.1756 becomes quite important support. If we break it, we'll come back to this 200 moving average again, and so on. So key resistance, look for a shallow pullback, and then another go for layer, uni layer. Okay, next one we're going to look at, and then we'd have a target 1.69. Makers, we haven't looked at Maker for a while, have we? I wonder what that's doing. Okay, never mind. Now, it looks like we're sitting on pretty good support, doesn't it? 1, 2, 3, 4, 5 weeks sitting on this weekly 50 moving average. That's pretty impressive. The problem is the shape of this makes me think of a bear flag. It just looks like, yeah, it's a bit of a struggle, isn't it? It's choppy whenever you have a bounce, but it's choppy, overlapping, each wave runs into each other. That says corrective, and it also says, the shape says bear flag to me. So if we break down, we're going to see another leg lower. If we see another leg lower, remember, in big swings, the bottom of the previous wave 4 is usually where you're looking back to. So these lows, without a fib or anything else, these lows really would be where I would be looking back to, which are at 1775 in Maker. So yeah, these daily moving averages are bearish. I'd be watching for that bear flag break. First place when you break it is obviously a retest to the lows, because if it's just going to double bottom, that's your first place to look for support. But otherwise, I'm going to say back to 1775. And I'm just going to see if that lines up with any fib levels. Yeah, 786 fib. Okay. So Maker, not yet. I don't think, unfortunately. Now, I'd be wrong. Let's take these drawing lines away so they don't influence us. If we were to get back above this 61.8 level where we've just double topped, and back above this daily 50 moving average here, I would say, you know, yeah, we've bottomed. We're probably going up. And that, you know, back above that daily 50, that's a really, it's like the backstop in terms of trend, the daily 50 moving average. So if we got back above that, I would say, yeah, let's look for this 200 moving average and this high, and this downswing is probably done and another leg higher. So that's what I would want to see. If we didn't break down, that's what I would want to see to be bullish in Maker from here. Okay, next one we're going to look at is ZRX, and then waves, 60k floor, Maxwell. If we hold that 60k floor, it's really bullish, isn't it, in Bitcoin? I agree with you. When I was looking at ZRX, these moving averages, unfortunately, are really kind of bearish. And this pink support level that I'm looking for comes from, I think, an equal measured move here. This is where this would take us down to 0.8555. So two levels of support, 0.928 and then 0.855. It does, we've rolled over and we are headed a little bit lower from here, unfortunately. Now, I could also see if this is 1, 2, 3, 4, 5, three-wave correction. We should be on our way again. I think if that's happening, this higher level, one of these two levels, is going to hold as support. But until we get there and see if we bounce off it, we don't know. So 0.928 is my more bullish support level that I would like to see hold if we're going to go up from here. So yeah, a little bit lower to come in ZRX, unfortunately. This first one is also the 61.8 from the high, and this is the big 886 down here. So one of these two levels, and we haven't quite tagged it yet. And then, yeah, a higher low, turn back up again, would almost kind of look like a continuation head and shoulders pattern, wouldn't it? Bullish one. So that would be a good look. But we have to turn up from those supports, and if we don't, yeah, it's not so good. Waves, well, there's, that's weird. Here we go, waves. Now, on the daily, let's put regular candles on. These are big daily moving averages here, and maybe we should be moving our fibs to this swing here, because this is quite a good combination of support for waves. These are, it's a pretty good support and resistance level. If we look left here, it's 50% back of this whole rally. It's the daily 50 and the daily 20 moving average. That all adds up to a great place for waves to bounce from. So it's just a matter of, is this correction complete? So if this was our first swing, and then we did this, did we do enough? I kind of feel like no. In other words, I feel like we should come back to this low in this 61.8 here. So this would be first swing, bounce, second swing. But if we bounce from here and get back above 29.53, I'm wrong. We're not going any lower and we're on our way up again. So that's what I'm looking for. This daily 50 moving average here and this 29.53. That's where we're bullish above. So you can tentatively buy it, expecting a break of it if you're feeling confident. You know, it is a really good support. Like, it's a huge combination of support we're bouncing from. But if we can't get above there, we're likely to see one more push lower. If we get above 29.53, we'll be looking for a retest of these big highs here at 34.90 and another leg higher, hopefully. correction complete. That's what we need to see. So again, another one holding a really interesting support level, one that I would be watching closely for a bullish reversal. I would even put an alarm at that 29.53 level, because if we break above it, we're going up. So that's waves, Waves, Eden. I don't think I've charted Eden before. So let's take a look. Okay. Oh, what a heartbreaker. This is so tempting because looked like we'd gotten above the daily 20 moving average, and we had really good look, didn't we, to continue higher. This is very interesting. I've got the RSI on this chart as well. You know, because there's a potential when I look at this that this is just a correction, and it's really always amazing to me how the 50% level in the RSI acts as a pullback level in a correction, so that 50% works as a pivot level. So for example, if you're in an uptrend and you're doing a wave 4, I often look for it, if it's a wave 4, I look for it to come back to the 50% and turn higher. And the same when you're in a when you're in a downtrend and you have a bounce, if you get back to the 50% and roll over like we are here, that says that this whole rally was just a correction. And unfortunately, if we measure this one as well, it kind of looks like we made one of those equal measured move corrections as well. So let's measure from this low to this high there to the tick in Eden, unfortunately. Exactly. Now, there it is. So we could retest this level, but you see these previous lows, I don't think we're going up unless we get back above 3.47. I think more likely that this could break down, and we'll draw it as a channel and a bear flag as well. So let's look for this. Like this. So first place we're going to be looking for is a retest of this trend line, third touch, and if it breaks, we're going to look back to these lows. So not one to buy for me at the moment. I would pay attention if it got back above 3.47, but otherwise no, I think this is still trying to bottom. Okay, ZEC. Let's find ZEC. I hope this is useful to people. Oh, I can't find it. Here we go. Zcash. This one looks like it's recovering from a three-wave correction. A pretty textbook one, right? Looks pretty good, doesn't it? And not only that, but in our attempt to go higher, yesterday we broke back above that important daily 50 moving average that was resistance on the 9th of September and again mid-month in September. So above resistance, we shouldn't now go back below this daily 50 moving average if we're moving higher or if we're still in an uptrend. So we shouldn't go back below 129. Today's daily candle, though, is a little bit of a warning shot at previous highs, isn't it? Potentially, we could end up making that pattern that this loves and pulling back to retest that support before we go higher. So if we do continue lower here, 129. Let's look on a lower time frame because I think it's all looking pretty solid, isn't it? This looks very much like the correct kind of correction that you would make in a wave 4. And so I would expect this sideways price action to resolve to the upside, and we'll be looking for that 200-day moving average again and a retest of this 236 fib first. So here's our first target at 154. Buy pullbacks as long as we stay above that daily 50. And then this is another one that's arguably, you know, quite a good bottoming pattern. And that would take us, you know, up to this 50% level at 234 or potentially 270. So I'm liking this, but we're not going to get there unless we can get above this 236 fib and this 200 moving average first. And potentially, let's see where the equal measured move would land us up. There it is. So this is what we need to break above 140, and then our next upside target is 154. If we stop here and we fall back underneath the daily 50 moving average, that was just a correction. So that 50 moving average now becomes really important that we stay above it, and it's at 128.6. So we need to stay above 128.6 on this pullback retest in Zcash. Otherwise, unfortunately, this is going to be ABC down, ABC up, and another leg lower to come. So watch carefully 128.6. Next one we're going to look at is EOS. This is another one, unfortunately. Now, we've just done the same. Let's do this. Okay. There's a couple of arguments I can make here about what's going on. This does look like a very nice 1, 2, 3, 4, 5 waves up, doesn't it? Followed by a big 3-wave correction. Excuse me a minute. Sorry about that. Followed by a big 3-wave correction. And if we put our 3-wave correction on and see where we came back to, 786 fib. When you do that, your target would normally be first target 38.2, second target up here at the 236 fib. So let's put some fibs on, let's put some projections on and reverse engineer them, because if we were to rally from here, we would then do an equal measure move perfectly up to that 236 fib, and this also would line up with the 61.8 here. So for me, if I reverse engineer it a bit, we're in a pretty ideal place to rally from in EOS. Also, so we know, got our targets now. Also, if we go down a time frame and we look at this, have we done enough with this correction? Yeah, exactly, we have. So I quite like the idea of EOS higher here. So we've got a double bottom. We've got what, a triple top up here at 4.73. So clearly we're going up if we get above 4.73. And our target is going to be two targets. It's going to be 5.13 and 5.62. So, but does that stop us buying it here? No, we could put our high inertia on, wait for everything to go green again on the retest. And yeah, so I really do like EOS to hold this support level. I think it's ideally positioned to rally from here. Hello, Squidgy Ball. Good to see you again. Haven't seen you for a while. Okay, so yeah, I love this level. Great level for EOS to bounce from. Let's see if it can. If I'm talking rubbish tonight, honestly, like, you've no idea what my head feels like, so I apologise. I'm trying not to talk rubbish, let's put it that way. Okay. Now, another one, lower high. What's going on? We'll put this one in the Bitcoin camp as well. What's going on here? 786, 236. Should normally come back to the middle from here. So it's done that 786, 236 cycle. 786. Okay. This one's got a little bit further to fall. Not much though. And potentially potentially this has completed a correction here. I just think it's a bit there. Oh, this is another one where it's a pretty good support level to bounce from. Back above 0.025 would say it's going up again. 0.025, that's what I'd be looking for in CRWNY for this correction to be over. And I think then that this is a wave 4, because this looks very similar to this, doesn't it? So we've got 1, 2, 3, 4, 5, 3 waves back. Yeah. It's happened a little bit quickly. When that happens, you know, sometimes that means that, you know, while the moving averages catch up, you do a bit of this. So you don't go all the way, and you maybe, you know, but yeah, this is a really good level for CRWNY to bounce from and to turn this into a rally. And what did we say about wave 4? It's in the 50% level on the RSI. Well, here's our RSI. Here's our 50% level. Boom. That's where we're turning up from. So this would say wave 4. New highs should come from this. So what is the support level reasoning? So CRWNY has made a 3-wave correction. 1, 2, 3. Equal measured move. And very often in an upswing, 50% of the last swing, or 61.8. No, I can't do this. Sorry, 1 second. Okay, there it is. So 38.2 from this whole swing. See how we bounced from the 236 fib? We didn't get very far, but this potentially, because of this 3-wave correction, also I can see in this hourly 5 waves down in this final leg, this is a pretty good place for CRWNY to bounce from, and because of that, yeah, that's why. There are so many, I know. It's exhausting sometimes flicking through the charts, like so many. I need to be more disciplined about not spending too much long on ones that really aren't setting up. Okay, let's look at REN. Now, let's go to the... I'm going to put regular candles on instead of high Kanashi. Now, very often, you know, when you bounce off a level and you go beyond the 236 fib and beyond, here we went beyond the daily 20. So this was a proper bounce. And when you can't get beyond the 38.2, very often that means that the next leg is often either a really deep retrace, or sometimes, you know, almost all the way back to the lows, so like an 886 or whatever. If we look at it in terms of our daily moving averages here, really we haven't been able to break that 220 And so that sets us up to retest this 50 moving average now for support and a double bottom. If we're going to go up from here, I'm going to look for this low to be the bottom. But as you know, very often when you come back, you go back to the previous swing low, don't you? And that excuse me, very often that means back to these lows. Now, if we're going to do 5 waves lower here, this potentially is 1, 2, and then 1, 2, 3, 4. It's very overlapping, isn't it? Let's just say that I'd like to see us find support here at the previous lows and the daily 50 moving average, which is at 0.9365. And I'm going to be bearish underneath this orange line and these previous lows, which are at basically 0.9. So we're looking to go higher from this daily 50 level, and we don't want to go back below that orange line, because that would be a bigger bearish reversal. Okay. If we do that, we're going to come back to the 200 moving average, probably, you know, a bigger 50% of this whole rally as well. And so that would mean the 61.8 is where the 200 moving average is. We could potentially come all the way back down here. So important support then at 0.92, and we're bearish below 0.9 in REN. Next one we're going to look at is IOTX and then OHM. So IOTX. Sideways range still. Now this one's crept a little bit lower, and I need to look at this on a 4-hour because I can't remember quite what's going on here. Okay. I'm doing lots of measurements here, but the most important thing I think is this 4-hour 200 moving average. No. This daily 50 moving average. Remember, the daily 50 moving average is like our backstop. If the 20 can't catch you, then you look for the 50 to catch it. If we're going to stay in the trend, if we look at these previous highs as well, this is really quite a good support level. There is room in IOTX to creep a little bit lower, down to 0.624, if I've measured this right. But if I've measured this wrong, this is good support here. And if we keep it really simple, say this is our good horizontal support, here's our good horizontal resistance based on the closing price here, look. So we're stuck in a sideways range with flat moving averages. If we break these lows, then these previous lows here are likely to be where we come back to next. We could argue that if we're going to do closing prices, that we should really do it like this, and this is now broken down and we're holding underneath it, which does kind of add weight to that lower support level, doesn't it? And if we were to measure from here to here, that lines up with this being the 61.8 pullback level, and this, where we're sitting now, the 50%. So holding pretty good support here, but if we were to continue a little bit lower in IOTX, 0.0621 would be where I would be looking for it to bottom. Now, How do we know if we are going to hold this level and travel higher from here? First, well, we've got to do a couple of things before I would want to buy it. We would need to close above this 20 moving average, and I would like to see really a close more than 50% up of this big red thrust candle down. That would point to then going back to retest the highs and then up from here. So this isn't going to be enough of a bullish close for me. I just want to see it that little bit higher. So for now, I'm sitting on my hands. We're holding really good support. If we could go that little bit higher, then I would get excited. You know, if you put a gun to my head in IOTX, I think I would certainly rather be long than short. I would want to be long, not short. The way we're holding this base after this false breakdown is pretty bullish, I think. Just need a little bit more for confirmation. Okay, let's look at OHM. Let's look at some more coins. Okay, OHM. Let's look at OHM. Gosh, this is all the way up where Bitcoin is, isn't it? 886. Ooh. When you reverse an 886 fib, your first target is back to the 50% in the middle. And then, if you go below that 50% or close below it, which it looks like we're going to do, your second target is down here at the 236 fib. So this one, I'm afraid, unless it gets and closes above 825 again, is headed lower, back to the 200 moving average and back down here. So that's unfortunately the bad news. Let's put our fibs on another way from this swing. So if we count off fibs on the way down, this would mean a 786 retrace of this big rally. At the moment, we seem to be holding above this high. We've spiked underneath it though. So, yeah. This is a downtrend, isn't it? We're holding previous lows. This is where our support is. So, I think this big low here. And this is our target if this breaks down from this sideways range. So, at the moment, that means that this is potentially support and we could turn it into something, and the retest is always the test. So if we were to do this and make a double bottom, or if we were to do this and make a higher low and then turn higher and break these highs, that would be a buy setup for me. If we made a false breakdown and a sharp rally, that would also actually be quite a good one. I do sound like shit, I know. I am getting better though. Last week was like diabolical. Okay. Anyway, don't say that. Everyone's gonna... I want everyone to go, oh, she had the vaccine and she's still got COVID. All that stuff. Okay, so that's Olympus. This is pretty good support around 740. But if we lose it, the target is 468 on the downside. Okay. ALCX. Now that one, let's just do it here. You know, whenever, okay, so what did we say? When you're in an uptrend, the previous swing low, this is an uptrend, isn't it? So each one of these swing lows, as we make a new high, becomes the support. So our important support here in ALCX, just looking at this hourly, is here, and we're holding it. So, and this shape is very bullish. It's a bullish pennant. When you make a triangle shape like this, it's a pennant. If you make a oblong on its side, it's a bear flag. So this is a bullish pennant. We are holding this 4-hour 50 moving average in these lows, and I like it. It's a little bit overbought though. Why would I say overbought? Because on the daily, we're a very long way from that 20 moving average. And when you pull back, that's normally where you pull back to. When we rallied here and we pulled back, the 20 moving average is where we came. When we rallied here and we pulled back, the 20 moving average is where we came before we bounced. And so potentially we could go sideways here while this 20 moving average catches up. If you make a pennant shape, that's usually what happens. So that would mean we do this. And then, you know, so we're in a sideways range, we're holding support, it's really good support, but I think that this is potentially a wave 4 or a triangle, and we may not rally straight away. This is the place though, you buy the lows, you buy support, sell resistance, this is support. So if we can turn higher from here, I would really like to see a nice green 4-hour Heikin-Ashi and this turn higher, then that would be a buy for me in ALCX. I'm not sure it's quite ready, but it might turn into ready overnight, mightn't it? Another way, if you don't use these indicators, you could put the fibs on. So again, because I think that this is an ABC, I'm going to put my fib from this low above the 236 fib. A close above that would be bullish. So above 362 would be bullish for ALCX. So our first target above 362 is going to be this trend line. If we break higher here, first target is the trend line. Third touch, expect a little bit of a wobble here before we break out. And if we break out, then I would expect to see new highs. So that's how I see ALCX. Really good level to bounce from. But we might not break out first time. We might need that moving average to catch up. Next one we look at is VRA and then ADA. Okay, VRA. VRA macro time frame. Okay. I'm going to look at VRA Bitcoin first, because you really do with these altcoins want to make sure that they're in an uptrend against Bitcoin. And clearly this one is. In fact, we're trading at new weekly highs, we're holding above them. So although we look a little bit like we've paused here in terms of where we're at, you know, this is a pretty good place to bounce from against Bitcoin. So VRA is Squidgy says it's going to look great because you don't own it. Well, I know, isn't that the truth? I don't either. But there are worse places to buy this than here. If this is a wave 4, we should hold above the 50%. We have. I think VRA against Bitcoin is setting up very nicely. And yes, holding the trend. So let's take a look at it against the dollar or dollar tether. Because this also, new highs. Exactly what you want to see. I'm just going to put regular candles on. Okay. Now, potentially, you know, when coins first start, they don't always trend straight away. And if we measure from this low, the lowest low, to this first swing high, and project it from this low here, we've reached that equal measured move level. Potentially, that could mean that this is just, you know, a big three-wave move, and we could continue lower from here. There are a couple of things that would tell us that this is a reversal. First off, this daily price action does not, but if we were to make a double top or a swing failure pattern here, that would say that we've stopped going up and we're going sideways. If we then broke these lows, then that would mean that we've got that bigger reversal. So we're going to watch and see what happens on the highs. And again, so this is where we're bearish. We're going to be bullish if we can close at a new high above 0.631, and we're going to be bearish if we come back to these lows and break them at 0.051. So 0.0633 above it, our target becomes, I need to put that 1272 in. Our target becomes 0.078 and then 0.097. If we drop back though, below these lows or more than 50% of this candle, that's going to say bigger reversal coming. We're going to come down to 0.041 to look for support. Okay, no, it won't be $1 in a week. Here's the thing, in this whole Bitcoin rally, I haven't really trusted it, I have to say. I keep, we can add Shiba, I keep looking at the levels and saying, this is a level that we could reverse at, we need to be very careful, blah, 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 and we'd never reverse, we just keep going. So I feel starting to feel like a bit of an idiot saying it in a big, strong uptrend. But, and every week that I say it, the shoutbacks get louder. And we're never going down, Bitcoin's going to 200,000 and all this. And the more I hear that, the more I think, well, I should be nervous. When nobody thinks it's going to go down, it's usually, unfortunately, when it does. So I'm not saying that you should sell a load. I sold a load when it got to my first target. But as I explained to my group, I really have two BICs. I have a long-term BIC of HODL Bitcoin, and I am quite a maximalist in that respect. And in Bitcoin, for me, I keep it really simple, and I know it sounds really stupid, but I use Heikin-Ashi, and these are moving averages on candles. They go red and green. It's that simple. And I try to buy as close as possible from when it goes from red to green, because you can see that's not usually a false signal, especially if we've made 3 waves of correction. Then it's very rarely a false signal. And so for me, I'm just going to stay on this ride until it goes red. That's my long-term BIC. But my short-term BIC, trading, they're trades, I have targets, I take profit, and I try not to, I use leverage, which is always dangerous. And so, I do try to take profit at targets and stuff like that. And so for me, at this point, especially as I feel like we're a little bit stretched in Bitcoin, unless we have a bigger pullback, I'm not going to load up with a load of leverage at this point. That's all I'm feeling about it, really. So, next we're going to look at ADA. Now, ADA was massively outperforming, but we've got a bearish cross now of our daily moving averages. Normally, that would mean back to the 200 moving average, which is down here. However, it's possible, and I'm going to zoom out now and look at the weekly. It's possible in ADA. I've put my fib retrace levels all the way down from these lows to these highs. It's possible that we could bottom here at this 38.2 fib level and this weekly 20 moving average. And how would we know? Well, we would know because we would get back above that 236 fib that's been resistance since we got underneath it. So we're going to be bullish again in ADA back above 2.373. And otherwise, the path of least resistance is lower or sideways while we chop people up. So we've got a bearish cross of our daily moving averages. That means if we were just looking at moving averages, not fibs, we would need to get above our daily 50 to be going up again. That was resistance when we tried at the end of September. So let's put our fib levels back. We're going to look for a retest of 1.92 if we continue lower. And if that fails, even further lower, potentially down to 1.55, and we're not done yet. I am feeling better, thanks Eric. So really that's where we're at, you know. The thing is, would I sell ADA here? No. It's just sideways chop. And this pullback, it's not going to be 5 ways because this is choppy and overlapping and so on. I would rather than sell this, I would rather be waiting for this to break higher again. Now, I think you could draw it as a triangle. So a breakout of this triangle would give us a little bit of an early warning. You could put an alert on that trend line. I think that I honestly don't know. I'm not in one of those pumping groups. I think liquidity has a lot to do with it as well, you know. You really don't want to be in one of those ones that they're pumping that have quite low liquidity. It's very difficult to get in and out of them. I don't think you can really guess. You just have to monitor and use alerts, and when they move, jump in, you know. Right then. So not bullish yet. First early warning would be above that 20 moving average, wouldn't it? Then a breakout from this triangle potentially, but neutral. I'm about as neutral as you can get, I think, for ADA at the moment. I wouldn't want it to. One of the things that they say about a triangle is if you break out, so say we were to break down here, you take the swing at the widest point of the triangle and you project it from the breakout point, and that gives you your target. That would send us down to this 200 moving average, wouldn't it? So, yeah. Right then. So ADA, not ready to go up again yet. Moving averages are all lined up the wrong way. I think it's more likely that we retest the lows than we rally up from here, unfortunately. So let's look, I'll need to speed up a bit because I'm being a little bit slow. Let's look at Solana, which was such a lovely outperformer and has sadly fallen back a bit. So okay, here's Sol. I really wanted this one to make, this is a 4-hour chart of Sol. When we've been following this over the weekend, really wanted this one to make an inverted head and shoulders pattern. So this is our head, this is our left shoulder, head, and a right shoulder, in which case we need to kind of hold this orange line support. Because if we don't hold this orange line support, there is a potential that we come all the way down here in a bigger 3-wave correction. So that's what I'm looking at. At the moment, this reversed to 61.8 and it came all the way down to the 236 fib. So it's in that golden ratio zone where, to be honest, there's no trend. The bulls and the bears fight it out. All of our moving averages are flat here on the 4-hour. And in fact, if you look at our daily, our moving averages are flat and bunched up here as well. So there's no trend. We're waiting for a breakout in Solana. And we're here in the middle. In fact, this pink line is here is our 50% level, and this orange line here is our daily moving averages. So in between here, we really don't have any trend. I would like to be bullish. We're holding in the top half of this green candle. In terms of bullish candlesticks, this is bullish. We're holding above our 20 moving average. This is bullish. But if we were to drop back underneath this 20 moving average, I think we'll see another leg lower, and that for me would be the get out of DOGE in Solana. So that's 154. Let's not close below 154, and then let's look for this to go higher from here. Now, if this is a head and shoulders pattern, our target will be twice the distance from the head to the neckline, and that's up here. So our target is 194.6 if we can close above 166. Now, I can see your question, Sam, about the ETF. Okay, if this ETF was to be a Bitcoin, physical Bitcoin ETF, I think it would be really bullish for Bitcoin, because they would have to buy Bitcoin to back their ETF. But this Bitcoin, hello Saeed, good to see you. This ETF is backed by futures. Well, somebody says, well, you know, won't this mean that institutional money will come in and buy the ETF? Okay, yes, it could, but most hedge funds and most funds have access to futures. They don't need to buy a futures ETF to have access to the futures. And, you know, you could say, well, to be honest, if I was a fund, I wouldn't do a futures ETF, because it's only open for trading when stocks are open, and the futures are open all week through the night, okay? Whereas an ETF is not. It's only open in US cash stock trading hours. So if I was managing a hedge fund and I wanted to get out if a weird move happened in the middle of the night, I wouldn't want to be in an ETF, okay? Now, I do think it's good for crypto generally, or Bitcoin, you know, people getting more comfortable with Bitcoin, because there are a lot of people in over a certain age who don't want to have a crypto trading account, and who would quite like some Bitcoin exposure and would buy, you know, like people who trade stocks and shares who are a bit older might consider a Bitcoin ETF. Yes, they might. And they are the kind of people that think that crypto exchanges are too risky and probably wouldn't open an account in one. And so that would probably help with kind of wider Bitcoin acceptance, but it won't help the Bitcoin price. They don't need to buy, you know. And the thing is with these ETFs, I think that they work really good for short-term trades, but they're not so, yeah, anyway. Those are my feelings about it. You know, institutional investors already have access to the future. Funds already have access to the future. Institutional money has access to the futures if they want it. They don't need a Bitcoin ETF for futures. So, yeah, I think it's a bit of a non-event, to be honest. Sorry about that. I know I should be more excited, but I'm not. Could this lead to Bitcoin price being distorted from its true value? Because it's very true in gold. For example, one of the things about gold, say, or it used to be, before there was crypto, everybody traded gold, okay? Now, in the futures, you need quite a lot of margin to trade gold, and you need quite a lot of margin to have a futures account. So if you're a retail trader, in America, it was quite difficult to trade gold. And so they had this GLD ETF, and everybody would trade that. And that became bigger than the physical gold futures. Not physical, they're not futures, they're futures, aren't they? So GLD became more popular than gold futures. The ETFs became more popular than gold futures. And not only that, but the options on GLD became more popular than GLD because it was cheaper, and so that would drive the gold price. So paper gold drives gold price, but you have to have that market be much, much bigger than the other market to distort the price from its true value. And we're a very long way from that, this Bitcoin ETF being bigger than the Bitcoin market and driving the price. So no, at the moment, I don't think it's anything to worry about. And it's a bit, but could it turn into that? Yeah. When CME futures first started in Bitcoin, they were a really small part of the market. Now they're bigger than any retail exchange. The CME futures Bitcoin price matters. Just like it's as important, just like in gold, it's as important as the physical price. It does drive it. So I think that there's more from the futures and options, there's more chance of that driving the Bitcoin price than this ETF on the futures, to be honest. But that's just my opinion. Okay. Right, let's quickly look at some more because my head hurts from coughing and I feel like shit, to be honest. Okay. So I will add SHIB to the end, don't worry. It's not like, I don't know. Right. So in Binance Coin, this coin has behaved really nicely by going fib level to fib level for me. And so clearly, there are some fib levels that are messy. 61.8 and 38.2 fib levels are messy. 786 is sharp. That means if you close above it, it will usually keep going. And so here, a close above in BNB above this 786 fib level at 479 points to more upside and potentially this 886. So it's a bit like Bitcoin. It's in exactly the same place in terms of a fib retrace. It's got room to go higher as long as we hold above 479 and we only see shallow pullbacks to that level. And so here you can see us just trying to break above it now. Now we have done this before. This isn't quite a new high, but this shallow pullback I think is looking like it can keep going. And if it does, I'm looking for 499.69, which is basically 500, and then a retest to the highs in BNB. So yeah, it's really trying, isn't it? It's nearly over the line. And if it gets there, that's where we're going. 500 and then 522. Now, if this is a false breakout, we close back below. We've had already a swing failure pattern here that led to quite a sharp drop. Then obviously we're going to do the same again, and we're just still in a sideways range here. So BNB trying to break out of this little sideways range correction. DYDX, let's do DYDX. So now we could look at this as a big wave one, and we could say 1, 2. It's quite hard to count what's going on here. So I'm going to say, right, we're going to go all the way from the lows. So rather than badly count this, we're going to go all the way from this low to this high. And we tried to hold this 236 fib. We couldn't. We tried to hold the daily 20 moving average. We couldn't. Broken underneath it. We're closing at a new low. Here we closed right on these previous lows. Now we've closed underneath it. I think it's a pretty sure thing that we're going to continue lower to 1836, which would be the 38.2 fib retrace. And I'm going to stick with these big fibs from the lows rather than say from here, because we kind of validated this 236 fib level. If I'm wrong though, and it's from here, say this was a 38.2, this is the 50%. If we bounce from this 50%, how will we know that I'm wrong and this is where we're going to bounce from? We're going up again, we'll go back above this 38.2, won't we? So that's going to be our decider. If we get back above 21.45, we've bottomed. Otherwise, I think we've got further to go, and no bottom yet. And potentially, potentially back to these highs here and 1836 next. So those are the parameters. So we're going to be a buyer here if we get support and bounce, and if we go back above today's high, also bullish reversal and looking good to go back up again. Those are the two levels that I would be looking for in DYDX. At the moment, the path of least resistance is lower until we get signs of a bottom, you know, and by that I mean double bottom, a retest of the lows, head and shoulders pattern, a big reversal back above the moving averages, something like that. So no reason to rush in this one to buy yet. Let's see now, if this was big ABC down and then ABC up and then ABC down, let's measure and see if we've got to that equal measured move level. Then we have. Then there is a good chance that we rally from here. Let's look for an earlier warning sign, Will. If we were to do our fibs all the way from this high this way and get above the 236 fib, oh look, that's in the same place. Actually, the price is just a squidge higher. So above 1.625, again, that agrees. That would confirm our reversal. Otherwise, this is resistance. Because these moving averages are the wrong way around, I wouldn't be surprised if we did this before we went up again. So be patient in DYDX, but like a lot of these coins that we looked at tonight, it's on a really good level to bounce from. Okay, let's look at BLOK. Let's save this and look at BLOK. Oh, losing my head. Oh, come on. BLOK, US dollar tether. So if this is a completed correction here all the way back to our lovely 4-hour moving averages and we're going up again, let me get rid of this, and we're going up again, then this should be like a 50 or 61.8 pullback and then up we go. If this is not, if this is a big ABC, then we go that little bit lower to that 61.8 level. So that would be all the way down here. 0.019, we don't really want to go there, do we? So, how do we know? We're going to put our fibs on from this high to low. We're going to look at where the pattern says we got to 61.8. Gosh, that says the 236 fib here. Next support. So that would be this 4-hour 50 moving average and 0.02. 0.02 then is our support, first support, and if we do that again, ABC, a little bit lower at 0.019. Between those two levels then, I would look for a bullish reversal. And if we don't get it, sorry, if we don't get a bounce from that zone, we're coming all the way back down here. We're going to do that equal measured move and go to 0.15. So this then becomes the level. We look for bullish price action in this zone between 0.19 and 0.2. So on a lower time frame, almost always in this coin as well, you know, wait for the first bounce, wait for the retest, double bottom, slightly higher low. Don't just buy the level blind unless you're a very good scalper. Wait and see that it makes a little bit of a base and turns up again. But that's what I'd be looking for. Between 0.1 and 0.2, any lower than that, we're likely to see new lows in 0.015 in Blocktopia. And then Shiba. We have been looking at Shiba. Let's start on a daily chart. So we're in that golden, I put it all the way from the highs to the highs when we very first started to these lows, and we're in that golden ratio zone in between the 61.8 and the 38.2. That's where we reversed, came back to, and now we're going sideways in a tighter and tighter coil, really, a triangle. This pattern is normally a wave 4, and so that's quite cool because that probably points to another leg higher when we break up. And when you break up normally from a 61.8, 38.2 thing like this, your next upside target would be the 786, and that's up here. So 4035. I would love to see this break out if this is three-wave correction is complete. If I measure from this high to this low, we're looking for this one to be 61.8. We didn't quite get there. Ah. So now it really does have to break out to get me to be a little bit excited. So it looks like we are. Where's the danger area if I'm wrong though? What about this? What if this is, we go from here to here. We've got two trouble areas then if you buy this. 3039 would say that this, if we got stuck here, this would still be a correction. And if we got stuck at the highs again at 3475, this would all just be corrective and we would see another leg lower before we go up. But otherwise, the thing is with this one, there's so much interest in it, and if it starts to move, it's probably gonna keep going because now everybody remembers the last run that they missed and they don't want to miss it again. So you know how we talked about earlier about coming back to the 50% level on the RSI, if it's a wave 4, and that usually holds, that would point to, you know, us doing this and this correction, you know, sorry. And then back to this 38.2 again and the daily 20 moving average. So it just kind of hasn't all quite reset, has it, on the RSI? And I would like to see it back at that 50% level, ideally, if I was going to buy it. Or at least just a tag of the daily 20. So I'm not entirely convinced yet. But let's just say that above 3041, I think we definitely have a date with the highs again and potentially new highs, because the people piling in will make that happen. So yeah, if you're long, there's absolutely no reason to get out of this one. If you're looking to buy, I would be a little bit cautious and just say I'd really like to see one more swing lower first. Okay, right, hope that helps everybody. I probably am more bearish than I should be. Now, for people who ask me for stocks, we'll cover them tomorrow. I'm sorry I didn't. So I just see one coin somebody asked for, and I'll look at Mango. Have we got further to go back in Mango? So here's a really good example of what we just talked about in Shiba. When you bounce from the 61.8 and you do that 61.8, 38.2 or 61.8236 thing, and it doesn't hold, you go one more swing lower. Let me just get this up here. So yeah, the 786, we're there now. This looks like not making sense though. Sometimes these fibs just don't work. And in that case, you just have to look at levels. And I feel like we're losing it here. We're losing the level. This could be a false breakdown. But really we need 1, 2, 3, 4, 5 to finish. And so let's see. Yeah, I feel like if we lose this support level, which comes from the lows at the end of September, if we lose this support level at 0.248, we're going to head down to 0.200 before we find a bottom. I'd love to see it bounce here. Clearly it's a pretty good level, but yeah, I feel like one more leg lower if we continue, and that's where we're headed, 0.200. 0.200. Okay, bye everybody. See you next week. Hope you all stay well. I hope you don't get this horrible cold. And trade